GM everyone. Today I'm going to be talking about a new product called Believe. So, well, it's not super new. This product has been somewhat viral in the past couple of days on crypto Twitter. Some of you might have seen them. Just a bit of background context. This is the same team with Clout, C-L-O-U-T, the SocialFi consumer app that went decently viral, I would say, a couple of months back. Now they have pivoted. There is still some sort of like social element to this, and you can connect your X account and all of that, but they have integrated a coin launchpad mechanism, so akin combining SocialFi with pump.fun, that enables you to believe in an idea, to believe in something. So the team and their investors are now trying to coin this term of internet capital markets. So essentially, if you believe in an idea, you can launch a token that is related to that idea. If there are enough buyers of said tokens, which the argument is that if there are enough buyers, it means that there are enough people who believed in the idea itself. The token will then graduate Meteora, and you can claim fees that is associated with the launching of the token itself for you to actually start building the products that you've been teasing to the masses, right? So let's take a closer look at them. So this is pretty much the flow here. So founders, they can test the demand for an idea by tagging this X account called @launchcoin. It is also created by the Believe team themselves. And you need to tag them on X by tweeting with a ticker, $ ticker, with whatever ticker that you want to have, plus the name of the project, business idea that you're going to launch. Now, if the demand is then proven, folks who downloaded the Believe app on their iOS app or any other Play Store can then purchase that token. If the token hits 100K market cap, so a bit similar to in like pump.fun, it needs to hit, if I'm not mistaken, like 6K market cap before the token will then graduate to an AMM. So in this case, the argument is that once again, if there is enough buyers, it means that people are interested in seeing the idea itself getting built. So once it hits 100K market cap, I will go into TGE, the token will then graduate, and you can now buy and sell those tokens in the open market. The fees will be split 50-50 between creators and the Believe platform themselves, and then the creators can then claim those fees and start building the ideas that they have chosen to convey out there for others to believe in. So I do have to give credits. Imran from Alliance is one of the backer for this. And for like Nikita, I'm not sure what's his association, but he's been much more involved in crypto consumer app lately. And both of them have indeed said that, have presented a very good argument that the flywheel for Believe is actually a lot stronger, or at least it's very encouraging to see that new cohort of crypto founders have started to implement these basic growth flywheel that we have seen many, many times in Web2, but just hasn't really been implemented in crypto before. So what Imran is saying here is basically there will be a concept called scouts, people that can discover best ideas and the best founders on Twitter. They can tag their posts on their behalf. And if the founder eventually builds those ideas, even the scouts can also get a cut of the fees in perpetuity. So the entire ecosystem is pretty much set in a way that there's unlimited upside if there is continuously new entrances in the market, and it's going to be a win-win-win situation for everybody. His argument here is that then you will see a lot of micro apps solving smaller problems. Again, they might not be, like your next $1 billion tokens or even hundreds of millions of dollars of token. They can really fit into this whole ecosystem of indiepreneur or like bootstrap founders that want to build something that might be worth a couple millions, that might provide them with a very good lifestyle business. Now you can associate a token with it, which quote unquote make it an internet capital markets, because in the traditional sense you would need to build companies really big revenue before you can even consider of going public. Even in emerging markets where the threshold for going public is a lot smaller, the amount of revenue that you need to hit is still much higher. But with Believe, if your idea is, let's say, even generating a couple 100K per month, the whole notion here is that now you can tag a token to that idea, and then you can launch and quote unquote go public with your ideas, with your products, hence creating the internet capital markets. Nikita here has also said that like one of the smartest growth flywheel is that you have to tag launch coin on Twitter to mint a coin in front of everyone. With every single action, with every single addition of new users, that will also create its own marketing for Believe app itself, which is akin to like how for Instagram, like every single photo was also shared on Facebook and so on. So credits to Pratik0x on summarizing some of the projects that have launched so far. You can take a closer look here if you just pause the video. But what I actually want to talk about is actually, despite all of the traction so far, they're generating around like 1.7 million in daily revenue right now, which half of that goes to the platform itself. So the Believe team has been generating quite a good amount of money. What I think is actually concerning here is whether or not you will see these tokens be associated with the products and the revenues built on top of them. Because let's say Launchcoin itself, any revenue generated from Believe doesn't necessarily go to Launchcoin's owners. And then of course, there's always the age-old argument of the Howey test that if you're based in the US, that even in the current new Trump's administration, it is still not as easy just to do some form of rev share, because there is still a good amount of regulatory risk. At the same time, I do think that if you don't do that, it is not going anywhere. The pump might only last for a month or 2 month max with like micro viral moments here and there in the future. But in order to really create internet capital markets, you need to at least force into the smart contracts or come up with, I guess, like new mechanisms that either conduct some sort of like buyback and burn per hyperliquid model or rev share. Again, if you're too scared to do rev share, then at least do buyback and burn. Even if some argues that that's not the most effective use of capital, at the end of the day, the retail buyers are now already smart enough to know that when they're buying a lot of these tokens, they're not buying anything. They're just buying momentum and narratives. So people will just trade those tokens, which might actually even create a negative effect for the founders, because then their focus is now so latched onto the tokens themselves and the token prices instead of actually building. But if there's like some sort of like mechanism in which 10, 20, 30, 40% of the revenue generated by the products is going to be used for buyback and burn of the actual token, now you've actually created internet capital markets and you've actually created pathways for people to go public much sooner. Well, that's my short TED Talk. I hope you enjoyed this bite-sized episode, and I'll see you next time. Cheers.